Morning, everybody. How are we all doing? Morning, Barryman. There is everybody. There's only 10 people in it. Morning, Paul. Lucas, welcome to the private streams. New member, welcome aboard. Don't know if you're here, but it says you subscribed, so there we go. Morning, Robert. Right, so it's Friday. Final day of the week at last. And basically, what a week. Market's just opened. We are off. No trade on the DAX this morning. Opening range or pre-market range is a little bit tight today. Obviously, the ADR is bigger at the moment because we've had an awful lot of movement. So we're expecting volatilities to continue. Short on the FTSE. Selling straight into support today, though. So that's not particularly good. But if we do break, obviously we'll be away. Not too convinced about that one this morning, but we'll see where we go. Morning again, sir. Morning, JC. Morning, KC. CK even. KC, JC. Everyone else got an initial. Morning, Gregors. Mumo, how we doing? Right, so today we're going to look at, have a recap of the week. So this today's stream basically is just kind of a general stream, really. Just to have a look at the week, do some FX analysis, just discuss stuff, really, and see where everything's been this week. Obviously, this week's been absolutely nuts. As you can see, market is all over the place at the moment. So this week I've not been trading. I just got flat this week, basically. I closed out my last trade yesterday, which was Swiss yen shorts. So I shut that yesterday. It's gone a little bit further. We did actually get a break of that low. I closed it out there because we hit that low, which we've bounced at multiple times. So I just wanted to get out. I had an opportunity to get out with a few $100s, which I took. But it has dropped down a bit more today. So I'm flat. But yeah, this week's been obviously crazy because of the elections. So we can have a look through all the pairs today, see where everything is. And I will be starting afresh next week. But obviously volatility is up at the moment. We had FOMC yesterday. We had the bank rate for the pound yesterday. Everything's up in the air. We've got new trade agreements going in with Trump. So it's going to be a hectic few months because there's a lot of potential change ahead. So change is good. Change makes volatility and volatility makes money. So that's what we want. Tom, I got that error again on the SIH. Any idea what it is? Nope. Did you check everything I put in the Discord group? Morning, Vitali. So yeah, if you're getting errors, that basically zero divide error is usually either an issue with data or lot size. It's a lot size error, basically. So your EA can't place the lot size that it's requesting. But I don't know. I haven't got anything to go on either because I don't know what your settings are. So I can't really help you unless I know what you're doing, unfortunately. So send me a set file if you want to. But zero divide errors basically are calculation errors with lots. So it's saying, I want to place a 0.77 in my case, short. And if your broker doesn't allow a 0.77 because they only work in micro lots, they don't work in micro lots, it won't be able to place the trades. So the other thing you can try is using a fixed lot size. So just go in with a specific lot and see if that works. If that works, that answers your question. But everybody's different, so difficult to help when I haven't got any sort of more info on it, really. But you can send me a set file. Morning, Shyam. Morning, Travel. Morning, Johan. 18% up in November. Yeah, not through skill. Part luck. But half of trading is luck, so I'll take it. Euro Yen ADR. So more strength coming through in the yen this morning. Big yen move going on at the moment. Obviously, because I got out my Swiss yen yesterday, the yen's rallying, obviously. But yeah, I mean, this month is... I made a a loss of 30k last month, and I've got 25 back this month. So I'm still 5k down over the last 2 months. So it's not, you know, it looks good, but it's not, because it's just a recovery basically. So this has been generated mainly by these trades here on the US dollar CAD. So these were aggressive drawdown control positions, Aussie yen ADR, which obviously played out after the move up basically. So but this is the thing with position trading. When you're position trading, you kind of want trades not to work. So if you look at the Swiss yen, if I get in here with a small lot size and it just goes down, I'm going to make a small amount of money. When you get in with a trade and then you scale in, you've got a much larger lot size on. So when the move comes, you make a lot more money. So it's a bit of a double-edged sword when you're position trading, because you kind of want the trade to go against you a bit so that you can get some size on, because size makes money. If you just get in with small lot sizing and every trade kind of works out within 1 or 2 positions, it's absolutely unstressful, but you obviously also make a lower amount of money because you've got less size on. So when the moves happen, you don't have the reward. So it's a balancing act. That US dollar CAD position obviously was, that was my initial trade taken here. So that was taken on the 8th of October. So it was a month-long squeeze. So during that month, my initial lot sizing jumped up to somewhere in the region of 14 lots. The initial lot sizing would have been something like 1.5. So by the time we got the move, my position sizing was massive. But I'd also taken a load of drawdown control. So, you know, like I say, in total, it's a 5k loss. But that's the way it works. If we knew where the market was going, we would go that way. Luck for the brave. Luck favors the brave. Exactly, yeah. So I just checked DC. Haven't been on today yet. You can send the set file through, but obviously if you're not on the same broker as me, it's not going to help much. But I can check your settings. All I want, you know, just checking the settings basically. Basically, Tom, at the end of the day, if it works in the strategy tester, it will work in real trading. That's it. So if you send me a set file that works in the strategy tester, I'm going to turn around to you and go, that works. Yeah. If you don't have it working in live trading, your broker is disallowing those trades for some reason. That's all I can say. You kind of have to do a little bit of digging, but it's 90% of the time, if you cannot get a trade on with the SIH or the ORB, it's lot size related. So if you are using percentage of equity as a or a fixed amount of money as a risk parameter, your EA will be automatically calculating the lot size based on what you are asking it to risk. If your broker is not allowing that lot size because it only allows you to trade in 0.1s or 1s and not 0.01s, it physically won't be able to get the trade on. If it can't do the ADR calculation, i.e. you don't see these numbers appearing here, that is a problem, because risk is based on ADR, and if ADR can't be calculated, risk can't be calculated. Other than that, that's it. So the best thing to do is to test it with a fixed lot size. If a fixed lot size works, you know it's a broker lot size issue. The easy way to test it is go and open up one-click trading. If you can go up and down in 0.01 increments like that, there shouldn't be any reason why it won't trade. That's really all I have, because that is all there is. There's nothing else more complicated than that. Right, let's start off with looking at the news. So FOMC yesterday, Bank of England dropped their rates yesterday to 4.75. We had Bailey's speech yesterday, uber cautious, really not wanting to do this at all. It was, yeah, we'll give you 4.75, but don't expect much else. So we might get one more in December, but I'm not convinced. The Bank of England seem very sure that we're going to jump up by 0.5% on inflation moving forward. which means that they're very, very, very reluctant to drop the interest rates. The other thing we've got at the moment now is Trump. Trump is going to change the trading relationship with everybody. Yeah. So it doesn't matter who you are, what country you are, he is going to change his mind about how you do business with us. Import-export duties are going to change. So the problem we have at the moment is everybody's on course for the inflation targets to be hit, meaning interest rates can be dropped. However, Trump can turn around and go, I'm putting all your bills up and inflation will rise, which means that this suddenly stagnates. So everything is up in the air at the moment. The directional bias on everything is virtually impossible until February, March next year. No one knows where it's going to go, because when he gets in and signs those pieces of paper, it's all going to change. So for the rest of this year, you kind of have to look at the pound being bearish. The Fed fund rate came down by 0.25. We're now down to 4.75 in the US as well as in the UK. So obviously the US had a negative reaction to that, which it will do. And the FOMC press conference, basically the upshot of that was everything's going well. We're on target to hit the 2%. And it looks like we are going to just continue to gradually drop the interest rates until we get there, which means that in December we're expecting another 0.25 drop on interest rates, which is bearish US. So we'll see what happens with the next CPI number. But at the minute, it looks like we should be seeing bearish moves in the US dollar. However, Trump's just got in. So again, you know, it's all with Trump now taking control. Everything changes with every currency, because the last time he got in, his job was to rally and make the US dollar stronger. There is no different remit now. He wants to do that. He wants to make America great again. By making America great, it means you make America earn a load of money, because if America earns a load of money, it can make itself great. Nobody will be poor. Everybody will get access to healthcare very cheaply. You know, that's his job. He wants to make it, you know, deport these 50 million people that shouldn't be here because they're costing us money. That's his job. You've got to pay for all of that. So very difficult to read into the FOMC press conference yesterday. He's going to let Powell stay in charge because he can make laws. The problem now with Trump is because he's got control of the Senate, he's got complete control. Think Emperor in Star Wars. He has just become the Emperor. He can make his own laws. If he wants to pass a law like Putin saying, do you know what? Presidents now don't do 4 years, and if they're lucky, get 2. They can stay in power as long as they like. I'm going to pass a law on it. Senate, pass this for me. Basically, that's the power he's got now, which means he can do anything. Financial markets obviously will move based on what's going to happen to those individual countries, and he's pretty much got control over what he does with everything now. So very hard to read into this. Powell at the moment's got a job. He could turn around and go, don't want you anymore. I don't like the way you're doing it. I want interest rates down at 4% because I need this to happen. Get rid of him. Put someone else in charge that's going to do what I say. That's where we are now with it, which is why everybody's so bemused as to why on earth you elected him in America. But anyway, it's done. So that's what we've got at the moment. So dropping interest rates. So pound sideways to bearish. US should be bearish, but obviously there's this caveat of what the hell Trump does. And today we got the Canadian unemployment rate at 130, so we'll see what happens with that. But yeah, been a manic week this week. So when you look at all of the normal price action that we see, the normal ADRs that we get, the normal daily ranges, and then you look at the day before the election itself, the day after the election, and so far, obviously, yen today already got ADRs. This market's in a mess, which is why I wanted to get myself flat. So this week basically is a case of hopefully today we'll get some normal range. So if you've been watching the ADR dashboard, this thing has been lit up pretty much to 225 ADR, 175 ADR minimum on everything all week since Wednesday. So this is obviously a measurement of volatility. When this starts to return to norms, a little bit like today at the moment, that's when we can start getting back into things, because things are just going to start to return to normal. For those of you that haven't traded through a Trump presidency before, we get what's called the Trump effect. he tweets something at random without telling anybody, and it's something absolutely catastrophic or amazing for the US, and he doesn't tell anyone about it, and you will see over the next 4 years the US dollar, for no reason whatsoever, a little bit like the Elon Musk effect with Bitcoin, just go mental. You'll suddenly go on a US dollar pair, you'll suddenly go blum. What the hell was that? Virtually every single one of those things that happened when Trump was in, when I was trading with Trump last time, all mean reverted within 24 to 48 hours. So he's really, really good for trading because he creates things like that, and things like that do that. So the A-shape and V-shape recovery on Trump tweets hopefully will continue to happen because there are amazing money-making opportunities. So if you're using the ADR dashboard or the ADR indicator and you see any US suddenly pump up to 150 ADR in a couple of hours, it's usually Trump. Virtually all of them will undo themselves by whatever they've done movement-wise. So very similar to the move that we saw with the sell-off, the election, and then the day after. That's the sort of thing that tends to happen. So it's going to be an interesting 4 years. And if he changes a law that he can stay in longer, could be an interesting decade. Who knows? He's getting on a bit, though. Time to use ADR reversals every day. Yeah. So, I mean, it's just one of those things that happens, you know, and this is why trading is not consistent. This is why you have to adapt. And there isn't a strategy out there you'll ever pick up and go, oh, that works all the time. You can't have that because the market changes, interest rates change, economies change, leaders change, wars break out, and pandemics hit. This thing never moves the same 2 years on the trot. No matter how many good years you have, you'll always have a bad one. And then the next year is going to be different to the year before and the year before that. So, you know, you just have to wait and see what happens. But at the end of the day, this is a completely random moving thing. Every single one of these instruments moves at random. And all you're doing is you're applying a risk mechanism around random price action. So as long as your risk mechanism is safe, you'll be all right. But the price movement will be different. And this is why we use ADR, because ADR is dynamic and it adjusts to price volatility. So as long as we're using ADR, we'll just be trading in line with what the markets do. MQL5 will soon be selling Trump EAs. Yeah, wouldn't surprise me. Anything new that comes out, somebody makes an EA. All they do is they rebrand another EA. So they'll put the word AI on it, resell it. It's the same thing as you bought before. It's just got AI on it now. So now we're going to have Trump on it. The MAGA EA. Yeah, exactly. It won't make any money. It's just another way to extract money from you, basically, which is always good. You know, that's what people like to do. US presidents can only do 2 terms. At the moment, they can. Yeah. That was exactly the same in Russia. Putin decided to change the law. Now Trump has control of the Senate, the lawmakers. So yeah, in theory, at the moment, right now, he can only do 4 years. So there's only 4 years worth of Trump, and then everything will change. So, but we don't need to worry about that at the moment, do we? We just trade what we see. So, morning, Georges. Let me just quickly see what that FTSE's up to. No trade on the DAX this morning. Opening range too big. That's annoying, isn't it? So the pre-market range was too small and the opening range was too big. Goldilocks is not around this morning, is she? So we are testing yesterday's low at the moment, which seems to be triggering some limit orders. So just going to watch this for a minute. In fact, I might just take one off. It's at 2R. I'm just going to take... Yeah, I'm going to take one off at 2R just to bank some money because I've only got the one. Why can't I close that trade out? What's going on? I've only got one trade on. Oh, right, okay. I was looking at my P&L and thinking, why is that so low? I've only triggered one trade, look. There's a sell order and a pending. So that because we closed at the lows, by the time the EA triggered the orders, one of them managed to get executed. The other one didn't get executed because the market moved too fast. So I've only got one trade on. Okay, well, in that case, then I'm just going to let it run. So this trade isn't on. This is... What is going on with this morning? Yeah, so I've just got the one sell on. I'm just going to cancel all these other orders off. Why can't I cancel that sell stop? What? I don't know why I can't cancel that sell stop off. What's going on? Why is it not letting me cancel that order? I'll come back to that in a minute. Anyway, that's very odd. It's connected. I don't know. Very weird. Anyway, so I'll come back to that in a minute. So that's your news today. That's this week, basically. Utter chaos. So we'll whiz through all the pairs this morning. There's a few ADRs to look at, obviously, on the yen pairs. So we are starting to get some rejection at ADR on these yens. I just had a reconnection there. Let me just see if I can cancel that now. Ah, there you go. It's cancelled off that order. Obviously had some weird disconnection there. So I've cancelled that second pending. I haven't managed to take profit on that because it wouldn't let me. So meh. Check the journal for errors. Yeah, I'll have a look later. Right. Euro yen. So we are starting to mean revert there. So drop down 5 minutes. Reversal, that's going to be a fair old way away on these today, I think, because yeah, you're not going to get an entry on it. It's too tight. It's going to be too difficult to get an entry on. Lovely rejection down there. So you've got Aussie yen extended, Euro yen, and New Zealand yen. So big push on the yens at the minute, all rejecting ADR at the moment. So we'll see if those continue. The weekly ranges, there's not a lot of point in looking at these weekly ranges. We know why they're weekly range hits. 175% of the normal weekly range is an anomaly. Don't normally get that. So yeah, big moves this week, obviously, based on the election. So can't kind of play any of those really at the moment. RSIs are totally flat. So basically anything that we've had extensions on this week obviously is playing out because this US dollar is or did start to mean revert. Which way this is going now, obviously very, very difficult. We'll have to just wait and see what happens with it. But the only thing we've got extended at the moment is the euro odd. But like I said, I'm not really interested in getting into anything this week. I'm going to reset next week and start again, basically. With new positions after this is all calmed down, basically. Just waiting for the dust to settle and for volatility to just return back to norms. And the way that you tell that is by getting a day where you don't get 225 ADR on something. So this today potentially looks like it might be the day that we actually start to calm down a little bit. So let me just shut that down a minute. Another terminal over there which is draining my power. Yeah, we'll whiz through all the pairs today. We've been in the members streams this week. We've been doing some strategy development on a couple of strategies which are panning out very nicely. So I'm going to do some more testing on those this afternoon. The members have got the EAs for them to do some testing as well. But they're basically variations on position trading strategies, and one is a kind of scalping strategy that one of the members has come up with based on one of the strategies that we were looking at, which seems to be very, very good. Although I'm a little bit skeptical at the moment because it trades around the swap, so we'll see. But if you're wanting to join the members streams, we're doing 2 a week at the moment. And it's all about strategy development and back testing, basically, and obviously proving strategies have an edge. But we found 2 potentially really good ones. So one of them is a trend following strategy, one of them is a intraday mean reversion strategy, and then obviously this little scalping strategy, which is very interesting. We'll see what happens with that one. But yeah, we're going to do some testing. So I'm probably going to put those 2 strategies onto forward testing next week. I just need to decide on the set files that I'm going to use, so we'll be covering those in these streams and in the member streams, obviously. Basically just seeing how they pan out in forward testing, because the back tests look amazing, but obviously forward testing is where the money's made, so we will test those. And for the position trading side of things, this now that Trump's in, and after this year of chaos, basically, I'm going to reduce risk on the position trading account, and just let that really play in line with swaps. So the new version of the Position Trader EA has a swap filter. So I've identified, as I said before, the thing that's really killed me this year has been swaps because of the interest rate differentials, and the interest rates at the moment are still very, very, very high. That was a really bad drawing, wasn't it? Still very high. So as these numbers are still big, and I don't think they're going to come down much next year, we're going to have high swap fees. So it's going to be more important than ever to stay in line with swap direction. So I've set myself a limit of a $5 swap. If something is going to be more than $5 swap, like yens, for example. So if you short the yen, it's going to cost me 30. If I long the yen, I'm going to make 10. So I will be doing nothing but longing the yen. Yeah. So I'm going to be using this moving forward from next week for the foreseeable, while we've got interest rates at the levels they're at. The UK came out yesterday and said, obviously with the interest rates, that there's a high probability that we will drop again, but they foresee inflation jumping by at least 0.5% over the next quarter to half year, meaning that if that is going to be the case and inflation is going to rise again, they will not drop this, which means that the interest rate differential on any US dollar or any pound trades is going to be high. So you've got to, this is a factor that hasn't affected me before since I've been position trading, because we have always had fairly low interest rates. We haven't got them now, and this year's been an absolute eye-opener for the amount of money it's cost. I've spent over $30,000 on swaps. It's too high. That could have been in the bank. If I don't trade something over a $5 swap, that would have been in the bank. Yeah, so it's a case of just adjusting. Again, market conditions are different now to what they were 2 years ago. So that's now a factor. So I will only be doing trades in line with anything under $5 negative swap, and positive swaps, obviously going to trade positive swaps because you literally get paid to trade. So and I'm also going to start to get out of trades quicker as well. So drawdown control, I did an analysis yesterday on the squeezes. I call it a squeeze analysis. Obviously, it's a relevant term. On the squeezes we've had this year. And apart from the fact that obviously because I was short on this US dollar CAD, it was costing me a fortune in swaps. The Swiss yen, just as an example, the Swiss yen trade that I took yesterday, I took off yesterday, yeah? So I took that there. So this was held for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. Yeah, I held that for 13 days. $850 that cost me to trade. The reason being is because of the swap fee. If I'd have longed this, I'd have actually made money. Yeah, so it's a massive, massive problem, swaps now, for position trading and swing traders. Yeah, even if you're a swing trader on high time frame and you're holding for multi-week, swaps are a big deal. So that is obviously part of the problem. The squeezes that we've had have been exponentially increased by that, but also the squeezes that I've been in, I've done an analysis using the position trader EA over some of the trades that I took. So basically, just to clarify what a squeeze analysis is. A squeeze analysis is basically where I go and look at the worst trades I've had this year, the squeezes I've had that I've had to get out of, this being one of them. I just okay, so you can see the drawdown. That's the US dollar CAD position in full. So you can see all of these exits here. Yeah, all of these failed drawdown control positions. Yeah, that's what's cost all the money. That is what made back 3/4 of the more than 3/4 of that squeeze. So basically what I do is I run all the squeezes that I've had, and normally there's 2 or 3. This year there's been 8. So I run all the squeezes basically through the position trader EA using different inputs for drawdown control, and exiting these squeezes after somewhere between 4 to 6 positions reduces the drawdown dramatically, a lot. And if we're going to get the market being like this moving forward, because this is the first year we've had this many squeezes, because it's the first year we've had all interest rate drops at the same time, and now we've got Trump coming in again, he can make the US dollar very squeezy. I think it's important that we start to exit positions a little bit quicker. So just doing the drawdown control a little bit faster. So I'm going to be running some final tests on that over the weekend, but it looks to me like probably the best thing to do at the moment is cut trades after somewhere between 4 to 6 entries and scale out faster. So I was previously doing it somewhere around about 6 to 8 level. So it's just a case of tweaking, not changing what I'm doing. I'm just tweaking it to make it a little bit less drawdown focused, basically. So but there's not many, you don't get many of these. If you look, the majority of trades are like this. That's that is what I would class as a very good position trade. There's one drawdown control and a very nice pullback on the leg. That's the norm. Somewhere between 2 to 4 positions is 85 to 90% of the trades that I take, which is absolutely fine. It's the ones that go over, which we've had more of, which are the ones that have really hurt this year. And by just exiting some of those earlier and bringing that average closer earlier, you can get out on little pullbacks like that quickly. So that's basically what I've been doing the analysis on. So I will let you know what set file I'm going to use for the position trader EA, but it's not going to be much different. It's just going to be a little bit less aggressive. I've been very aggressive this year, very aggressive, too aggressive, almost revenge tradey aggressive at times, which is bad. But that's what human beings do. Love the idea of trading on positive swaps. Yep. You could have the EA set up to positive swap only. So if you set the swap filter to 0, it will only trade if you're going to get paid. So you could do that, which just means you would never go long on the long on the euro US dollar. You would only ever go short on it, which is not a bad thing, is it? Trump's in, US dollar's likely to rally. Euro is dropping interest rates and their inflation doesn't seem to be wanting to bounce, so that's going to be bearish. So yeah, I do want to be short only. The problem is, how'd you get in? Yeah, you had an entry back here, and you'd have to be using 70/30 RSI. You had an entry there. So the trouble is when you go, and the advantage of using swap filter is the market is more likely to push in the direction of the positive swap. So you look at the yen. Yeah, the yen is a very well known carry trade. Yeah, we've been doing it for decades, buying the yen, only buying the yen. The yen only goes up. Yeah, it's just what the yen does. It's a trending thing. It's because it's got positive swaps. So if you buy the US dollar yen, you actually earn interest on the trade, which is why they call it the carry trade. So the market has a built-in tendency to want to do this more than do that, because doing that doesn't make them as much money. So you've actually got the kind of the rhythm, if you like, of the market will always try to go with the most positive swap, because basically at the end of the day, the market is just playing interest rate differentials to make money. That's what the market does. Yeah, there's absolutely no point in putting all of your money in the yen if you're going to earn 0.25% on it, when the US dollar will give you 4.75% interest on it. So you put your money in the US dollar. That's how they attract investment. That's basically what a market is at the end of the day, isn't it? It's banks earning interest on money deposits. Elon Musk, richest man in the world, earns around about $20 million a day. Yeah. He can't spend $20 million a day. So what does he do? Puts it where all the higher interest rates are. Yeah. He's got a large holding in the US dollar. He's got a large holding in the pound, I'd imagine, as well, because that's where his money's going to make money. So it doesn't make sense for Elon Musk to sell all of his US dollar, does it? Every time he buys US dollar, the US dollar is going to go up because he's got a lot of it. Yeah. And all we're doing is we're using that to our advantage. But in the past, the differential has been small. Yeah. Now it's massive. And it has been massive this year. It's just something that's gone under my radar, basically, because it's never been a thing. So, while longing the yen, what will be your strategy to reduce risk during interventions? I'll be keeping an eye on the market and seeing if they're going to intervene, basically. But if you look at the interventions, probably daily's the best. Weird. If you look at interventions, that's what tends to happen on them. This one, admittedly, would have hurt a lot, but we knew it was coming. Yeah, the thing with the Japanese interventions is you always know they're coming. And, this is what I keep saying every time we come in here and the Japanese say, we are closely watching the Forex movements. I just turn it off. But I won't be trading the yen, really, position trading, because I've got the new yen trend strategy that I'll be employing on the yen pairs. Yeah, so the one we've been working on in the members streams travel, I'll be using that for yen trading rather than position trading, because it's better, I think, to use that strategy. I've been doing some back testing on this. We'll share my results. How do you back test on swaps? They're different. You can't back test swaps. This changes constantly, so you can't back test it. But unless you've got historical swap data from your broker, which is all unique. Every broker is different as well. Now, your broker, if you're not on Robo Forex, you won't be getting these swaps. You'll be getting different ones. You can't backtest swaps unless you've got a database of swaps, which you can backtest swaps, obviously. But I don't think that exists. But anyway, right. So let's whiz through all the pairs this morning. Oh, that's really annoying. I only got a single short on that. I'm just going to take a 3R on this. If I get the 3R, it'll be like $400 or $500 something, I think. $300 odd. Hang on a minute. Why have I got two TPs? What is going on? How can I have two TPs on one trade? Oh, they did both trigger. Oh, Darwin X has had a very weird thing today. Something's gone massively wrong with Darwin X. That was showing as a sell stop. It actually has triggered as an order. Right, okay, so I have got two shorts on. Not being funny, but that's confused the hell out of me this morning. Okay, so yeah, I'm going to just let that run. So it's either going to be a 3R and a 5R, or we're going to stop out at a break even on it. That was a sell stop a minute. You saw that. That was a sell stop. I switched servers, basically. I came down and rescanned servers, which you heard the disconnect and the reconnect. And all of a sudden, now that is filled, that order. That's really bad. I've never seen that before. There's a glitch in the matrix today at Darwin X. Right, anyway. So we're going to whiz through the pairs, have a look at where everything is. Obviously, Canadian dollar this afternoon, we've got news. So unemployment rates are coming out. We've got Michigan, which is hit and miss. But what I'm hoping today for is basically a nice relaxed day with, you know, if stuff hits ADR, that's fine. But I want to see the market sitting around within ADR and coming back to some normality so that I can turn the EAs back on next week and start to get into some new positions, basically, because I've got no risk on at the moment. So yeah, so basically it's just a case of seeing where everything is. I think with directional bias at the moment, I am literally just going to let the swap direction decide. I would much rather be long on US dollar, which means I'd rather be short euro US dollar, short pound US dollar. And as you can see, the swap direction agrees with that anyway. So the fundamentals, I think, are probably like that. The swap is like that. So as far as I'm concerned, I can put the EA on and just let the EA get me in and trade in line with swap, basically. So the directional bias on everything at the moment, you have to obviously look at the fundamentals. What's the date today? 7th. Oops. You have to look at obviously the fundamentals and the directional bias that we should be getting from the fundamentals. But I think at the moment, because now Trump is in, the fundamentals are going to shift a little bit. So every country now has got to the point where the inflation figure is pretty much where they want it to be. Yeah. So inflation is around about the 2% mark for most at the moment, which is good. We're getting to where we want to be with that part of it. So it's a case of now they've got the interest rates at the levels they've got them at. What we're going to see, I think, from here is we're going to see another year or so of high interest rates. We were used to 0.25s, 0.5s, maybe 1% interest rates for the last few years. We're now up at the 4s and the 3s and above. I think we're going to stay around here. We will see them dropping by 1/4, 0.5%, and then freezing, and then might have to put it up by 1/4. So I think interest rates you're going to see are going to remain high for the next year or so, meaning obviously these swaps are going to be expensive for the next year or so again. But from a directional bias, I think we're going to move into a period now for the next 6 months or so where interest rates are going to be a lot less directional for the market, because everybody's kind of done the interest rate rally, the interest rate freeze, and the interest rate drop. And we're kind of at a point now where there's no reason to continuously drop, but we'll probably stay around about where we are. So if interest rates are not going to be the main driver, we know what the main driver is going to be. It's going to be US decision-making processes and wars. So I think everything at the moment, you can kind of look at it as a really trade in either direction. But the market is want to go in the direction of the path of least resistance, and that would mean at the moment going with the US dollar. So everything bearish against the US. With things like the Aussie and the Swiss is neutral and it should remain neutral. The yen we don't know about, because the yen basically has been a trend monster all its life. Now it's got positive interest rates. It may not be, but again, we need to wait for a year and see what they do with it. Now we've had a massive intervention on that. So from my point of view, bias I think is kind of not there anymore, and let the market do what the market wants to do. However, I would always be a little bit more bullish on the US. So running through everything, obviously the Aussie at the minute, as you can see, is very, very sideways. We haven't really gone very far. Both commodity pairs both sit nicely together. This is one of the strategies that we were looking at, is a overnight scalping strategy on Aussie CAD, because it's very orderly. But at the minute it's not really doing anything. When you look at a range and you are in the middle of the range, you can obviously go in either direction. We are extended to the upside, and as you can see, the reversal is starting. So there was a 5-minute reversal alert on this one this morning to go short, which is working out very nicely. But yeah, that would have been a nice little short opportunity this morning. Aussie dollar Swiss, same thing. Hourly RSI extension short is starting to play out. So that is also a 4-hour RSI extension. But like I said, all of these RSIs that we've had, this was lit up a lot this week, obviously, because of the movement that we've had. They're all starting to play out. So that RSI entry there, that would have been a short I would have taken. Beautiful weekly double top as well. So that's a nice little opportunity for a short. But again, you missed the reversal alert. This was actually yesterday. The reversal alert and the retest on that. All the yen pairs at the moment. So we've just broken out over the last week or so of some of these ranges that we've been in. And it looks like it's coming back down again now. So again, you had a short opportunity entry yesterday or the day before. Yesterday it was. But you know, if you're taking anything this week, you're very brave, obviously, with what's going on with the US elections. So but that would have worked out nicely for you. But we're coming back down into this range again. So this is potentially just a false breakout. And we're just going to sit back in here again. But like I say, with the yens, I'm going to be employing a new strategy on the yens to trend trade them rather than to try and position trade them, which will entail a stop loss. So I'm going to employ a stop-based strategy on the yen pairs and see if we get that to continue to trend, which hopefully it will. But all the yens basically are the same. We're sideways. We have been sideways for a month or two. We've got the odd breakout there, Swiss yen. That was the short one that I played off that extension. But yeah, everything else yen wise is just kind of a bit flip floppy at the moment. So any RSI extensions that you take on it are likely to work out. Obviously, bear in mind if you short it, it's going to cost you a load of money. So long ones are going to be better. But yeah, so they're all kind of doing the same thing at the moment. So it doesn't matter which one you trade, probably just trade one. Yeah, RSI extensions on it. Morning, Wojciech. Morning, Blue Trader from Pontevedra. Cloudy. It's cloudy here as well. You're not getting any advantage in Pontevedra over us in the UK. It's still cloudy. So yeah, so those are the all the yen pairs. The rest of the Aussies, Aussie New Zealand completely sideways. This is one of the ones I did the squeeze analysis on as well, because I've had some squeezy ones on this as well this year. It squeezed me before. It's one of those pairs. It's the only FX pair that isn't yen or Swiss related that really hurts me in the past. These parabolic moves that tend to come from the Australian dollar when there's a shift in interest rate differentials between these two are awful. So again, Aussie New Zealand is one of the ones that's cost me a lot, and the analysis I did on this one showed me that if I'd have got out after 4 trades, I would have got out of them. So I think it's a case of, with some of these pairs, there's a good probability that this will happen again, because one of these is going to either dump or pump their interest rates and come out of sync, and we're going to get that massive move. But I would only ever be doing that, not longing it at the moment. So yeah, totally sideways, as you can see on this one. There's absolutely no reason why you couldn't take a trade in any direction on this. Long it, short it, doesn't matter. At the moment, it's completely range bound. We've got the Australians not dropping interest rates. We've got the New Zealanders dropping interest rates. So with the Aussie, basically, we're still sitting at 4.35. They're the only country that hasn't dropped interest rates yet. They are getting to the point now where they're going to need to. However, if you look at where they are with regards to the other big countries, they're still lower than most. They're a little bit higher than the CAD and the Euro, but they're lower than everyone else. So there's not actually a reason for the Aussies really to do anything dramatic with interest rates either, which means it should probably sit around, especially the Aussie New Zealand. And Aussie US obviously got out of that long before the election. It's a short at the moment, but obviously any RSIs this week are just election. Yeah, it's not real real movement of money that requires profit taking on. It's just knee-jerk reaction to getting in and out of the market. So next week we'll see where we go, basically. Barryman, do you mean fully close all 4 positions? No, just individual trades. So basically, exiting the trades after 4 positions. So individual trades. So I don't want to hold more than 4 positions at a time on an instrument. Yeah. So keeping on top of that drawdown control. Some of the positions, the worst, whenever you do any trading, everybody always says, journal, journal, journal. Always record all of your trades. I don't do that because I don't need to know what is and isn't working from a strike rate perspective. The reason everybody that you ever buy a course from or listen to that uses a stop loss tells you to journal is because they want to know which trades work and which ones don't, which is understandable if you're using a stop loss because you want to reduce the amount of times you lose your account. When you're position trading, it's more about, we know the market's going to go up and down and we're going to constantly make money 80-90% of the time. The 10% of the time we don't make money, it's about applying a different risk structure to those types of moves because they are the abnormal ones. I keep going on in the members streams about this bell curve thing. Yeah. Outliers that are either side of the bell curve. This is where you need to focus your attention when you're journaling or analyzing your performance, because this stuff just looks after itself. Yeah. The 90%, 80%, whatever of the times where you use the EA or you use a strategy and you get in and you get out and you get in and you get out and it just works perfectly, you don't need to touch it. Don't focus on what's working. Focus on what's not working and eliminate the what's not working part. That's where you make the money. And all the squeezes that I've had this year that have hurt me will have been reduced by more than 50% with that setting. When I look at the positive trades, everything that's worked out this year, which is this sort of thing, yeah? They are all within 4 positions, the majority, not all of them, but the vast majority of all the trades that have worked out this year have been less than 4 trades in a position. So by applying a drawdown control mechanism when we get to 4 trades, anything that doesn't work is going to hurt less. So what I'm interested in is reducing drawdown. I'm happy to take more loss, but I want less drawdown this year. I've taken way too much drawdown and held trades way too long. that's what my focus has got to be on shifting from what I've had this year, basically. So that's all. There is an argument, obviously, as well. I've been doing some testing with closing out all trades. So somebody asked me to put this input in, which is close all trades at a maximum drawdown target. It's not something I've ever used before, really, but it's what they wanted to do was to see how many times you hit 10% drawdown in a year. So I set this up as a 10%, but you can set this as anything. By using this control mechanism here, on the vast majority of pairs, I think there was one or two that didn't work with, but the vast majority of pairs, you never hit 7% drawdown on any instrument. No individual instrument got a maximum drawdown of above 7%, because I set this to, I did an analysis on it by basically saying test 5, 6, 7, 8, 9, and 10. Yeah, that was the magic number. So if you control all of your trades and only have 4 open at a time, you will get a pullback. Yeah, before you hit a 7% drawdown. So for me, 7% is kind of like the magic number. I usually don't have more than 6 to 8 positions on at a time. Yeah, 6 times 7 is nowhere near an account blow. So it's doing the maths basically to make sure that you can control these 10% of trades that just go haywire. Yeah, and that's what I've been focusing on with the analysis. So I mean, I'll run this one. What's this doing? Yeah, this is a fairly small one, but yeah, that's basically what the analysis is has shown, and all you can do is go on what you've seen in the past. There you go. So we did 2, 3 drawdown controls, 4, 5 drawdown controls on that. Yeah, so we took a loss. We have to. It didn't work. Yeah, but the vast majority of the trades you'll see playing out here will be somewhere between 2 to 4 positions, 2 to 4 trades in a position. That's the norm. That is the norm. When we get the outliers, controlling them quickly allows you to exit quickly. If you don't exit quickly, you won't get the opportunity to get more risk on. And this is the problem with position trading, is when you get into drawdown, if you get into drawdown on a trade and you just keep holding it, what you're missing is the opportunity to scrap that and take another position that will generate profit. So by taking these, you actually make more money long term than holding this and not taking all of that profit there because you are holding that trade too long. So getting out quicker actually makes it the edge more profitable, if you see what I mean. So so there you go. So that we took one there, quick exit. I had another 2 trades there taken that may not have been taken because I would have still been holding the old one because I didn't do drawdown control fast enough. And when I used to do it manually, this is how I used to do it. I used to take trades off and remove trades and do much more drawdown control. I've become lazy, I think, basically, which is part of the problem with automated trading. It does make you lazy. But, you know, you can see here, this is a 4-year test. We've had 1, 2, 3, 4 squeezes in 4 years. It's about right, 1 a year. That's the norm. This is the norm. But controlling this means that you make more money because you're out of these crappy trades quicker, which allows you to get in on the next extensions and milk those. And if you hold them too long, you don't get to milk them. So that's basically what I've been playing with and doing the analysis on. And also, you know, if you say, cut me at 5%. Yeah, so if basically we get to 5% drawdown on the account, cut it, get rid of it. This is what somebody wanted to test. So I ran that test. And what you end up with is these huge dips in your P&L. So it looks like it's going swimmingly. And then all of a sudden, you'll lose all of your profit. And it looks swimmingly. And then you lose all your profit. Yeah, and it just doesn't work. Cutting totally. You've got to do drawdown control gradually because the market will not go that way forever. It has to pull back. They have to take profit. Otherwise, they don't make money. Again, I tested all of that and it didn't seem In fact, this is, I don't know what pair this is, but this one obviously doesn't hit a 5% limit. Or maybe that was a 5%. Yeah, that would have been a 5%. So that was a big loss. But you see, it wipes out all of the profit. There's no point in doing that. If you do gradual drawdown control, you'll get all that back, basically. So, but yeah, I've been doing some testing. I've also found a bug. I'm going to have to fix this. With the anybody using the exit on ADR feature that I introduced, that calculation I don't think is correct. I'm doing some more testing on it at the moment, but it seems to be getting out earlier than that, because what that should be doing is finding your average price and then using an ADR distance above the average price. It doesn't seem to be doing it like that. It seems to be working with the average price based on your lot sizing as well, which means that we're getting out of too many trades. That's not what that is meant to be doing. So I'll probably release an update for that. I've just got to make sure that I've got the calculation right. As you'll see, I've put an average line in the EA while I'm testing this. So this is your average price line. It draws it now. I might leave this in as a feature actually, just so that I can test the measurement and it's not been measuring correctly. Whoops. It still works, you know, it still gets you out. It just doesn't get you out at exactly the right calculation. It's about a third, maybe a quarter quicker in its exits than it should be. But anyway, I'll update you on that. So yeah, Aussies basically, I think I can trade. I'll be happy to trade in either direction at the moment. You can see the swaps on them are fine as well. So Aussie US, I'll just go wherever. Obviously, I think with Trump in, the long-term bias will be that way, but obviously long-term trends have pullbacks, so I don't really mind trading in either direction. I don't think we'll get a parabolic squeeze on the US dollar. We need to be paying attention to what Trump says, obviously, but I think it should be fairly orderly, the movement. Just coming up to target on the FTSE. If you did take a pre-market on the DAX today, well done. You're probably already out. Unfortunately, it was a bit too tight for me this morning, that one. Did you consider drawdown reduction algo, like closing the first position with the profit of the fifth position? Yeah, but manually. There's too much discretion involved in that. Yeah, I have built algos to do that. So basically what travel means is when you get into trades and it pushes up, yeah, use profit of this to get rid of that. So let's say that makes 1% and that's 0.5% in drawdown, or that's 0.5% in drawdown or something. So use that to close that. The problem with this is it introduces too many variables. So this is a discretionary thing. Drawdown control is discretionary. Some people will say that trade needs to be X before it does Y. Some will say that one should only control half of that one. Some people will want it to do that one. Some people will want it to do this. The amount of permutations of the ways to do this is virtually impossible to code into automation because there's too many variables. There's too many ways to do it. So you'll see me do it regularly. I will go, we're pulling back on this. I'm going to shut that and do that. That's what drawdown control is, and that's the way I do it manually. The EA, I think the best way to do drawdown control at the moment with the EA is to use this number of trades. So if you're in 4, yeah, you know the risk on that one is 0.2 over an ADR or something. By the time you're in 4, if you've got 3/4 of an ADR apart between your trades, you can calculate roughly what that drawdown is going to be, and just stop taking, stop adding, but also reduce. Yeah, same as this. Look, this is done exactly the same thing. Look, that was a drawdown control. But look at where it did it, a double bottom as well. You know, this is why I'm a fan of manual drawdown control, because EAs are idiots. EA did drawdown control there. To me, I'm looking at that going, why on earth would you do drawdown control at a double bottom? That's where you buy it. But the EA's stupid, because all it's done is done what it's been programmed to do. There is no way to program intelligence into it. I don't care what you say about artificial intelligence. It ain't doing it. Yeah, it's not going to be better than a human being at deciding what's going on. It probably could be at some point, but at the moment, you got to do this stuff yourself. So, but anyway. So you'd get into a fifth trade, but then it close 100% first. Yeah, so that's what it already does. With the mean reversion strategy, you basically use RSI with a reversal signal. Yeah. Either a support resistance line or below, or by an ADR line. Robert, go and watch the Bootcamp if you haven't already on the website when it loads. That explains position trading basically. But SMC will say that they sweep the double bottom. Yes, they will, because SMC are stupid, aren't they? Nobody makes money with SMC apart from one person. We know who that is. Yeah. The person that invented it out of fresh air. The person that made the algo. The person that has been outed as a complete fraudster. Anyway. Is that a stop run? Or is it limit orders? Or is it complete fluke? Is it, you know, does it matter? Price goes up and down. That's literally all it does. It's binary. CAD Swiss. Bang in the middle of a range at the minute. Well, not actually, reversing from the top of a range at the moment. So propulsion gap fill, high. There's a stop run. They ran the stops. Quick, short it. So yeah. Looks like a good short because obviously they'll want to take profit on that leg. So watch that as a target to the downside. Swissy at the moment, very, 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 very range bound on virtually everything. The Swiss has virtually gone to sleep. It's gone very, 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 very quiet, which always worries me because obviously we know the Swiss franc, when it wants to go, it goes and it doesn't stop. So swaps on this, all Swiss pairs now, swaps are long. It's expensive to short the Swiss. Obviously, because of the interest rate differential, the Swiss franc interest rate is 1. Everybody else is above it, apart from the Japanese. So obviously, you're going to lose money if you short against the Swiss. So all the Swiss pairs, obviously, it's not good to be going short on them. But at the moment, it's not moving anywhere. So all Swiss franc pairs are totally stuck. So range high and low bounces is what you want to really be looking for. I'd be much more interested in range high bounces, obviously, because you've got the swap on the side. In fact, the pound Swiss, pretty good extension on that one. On the hourly, I'd imagine. I didn't quite get on the hourly. So yeah, that would have been a nice little short at the monthly highs. Yeah. You've also got another monthly coming up there. You can see the range is very clear on this. You know, it's just, we're flip-flopping around at the moment. So it doesn't really matter which way you trade any of these Swiss pairs. They're all pretty decent at the moment. Euros, we are at the moment with Lagarde. It seems that we're very much a case of everything's going swimmingly. Inflation's come down beautifully. Interest rates are coming down. Disinflation is faster than anticipated. Therefore, interest rates should probably drop quicker. So of all the currencies out there, the euro at the moment is probably the more bearish of the lot. The problem we've got with the euro is now with Trump being in. Don't know why I circled that. It's just an obvious double top. With Trump being in, is the trade tariffs that he's planning, or we think he might be planning to implement, are really going to hurt the Eurozone. So the chances are that the Europeans will struggle from a trade perspective with the US. Quite what impact that will have on the euro, we'll have to wait and see. Obviously, the whole point of having interest rates to control inflation is that you can control your economy and you can control the costs of everything. So if trade tariffs go up, they will probably need to definitely freeze interest rates or maybe even rise interest rates to combat that. So right now, this is probably much more bearish than bullish. So any decent pullbacks would be good looking short opportunities. Swap short is good. Swap long is bad against the Australian dollar. So again, all in line. You'll find that these swaps will most of the time line up with the fundamentals. So it's a good little filter to have. It's almost like I've introduced into the EA a fundamental filter, if you like, the directional bias long term, which is pretty good indicator. But yeah, so shorts on most of the euros at the moment. But again, we just need to wait and see when the market calms down. At the moment, it's obviously, you know, everything is volatile. When the US dollar goes like this, everything goes. So there's a high probability at the moment of everything starting to pull back next week, which means that there'll be some good opportunities to enter some trades next week. You can obviously try and get in on these if you want to, but you know, the Trump effect we've got potentially now. Don't forget, Trump is getting into office. He is president-elect. He can still move the market before he even gets into office, because over the next 6 weeks or so, he's going to be saying what he's planning to do. Those plans come into place in January the 20th, when he gets into office. Right now, the markets are going to be listening to see what he's planning to do, because they will be wanting to put themselves in the direction of what his plans are. So you've got to be paying attention to anything that comes out of his mouth, basically, from now on. But all euro pairs, obviously, everything's moved on the US. So everything looks like a really good mean reversion opportunity at the moment. We've got lovely big propulsion gap targets that have been set up by these US moves. But whether or not they're going to do it, we're just going to have to wait and see. So you're either going to get in with things like this US dollar CAD at the moment. You're either looking, I'm going to take a long. I think somebody said about the pound US they got into as a long yesterday, which is great. Good looking trade. However, if it doesn't work out, it's just going to have to be turned into a position trade, isn't it? So it's either going to do that or it's not. And if you're getting long on it because of the extension there, I mean, you're out of that one already. But if it doesn't work out, you're just going to need to position trade it. And these propulsion gaps that we've got here on the US election news, they will either become orphaned or they won't. And we won't know that, obviously, until the market's moving off next week and the week after. So either we're just going to go back to normal and this will become a V-shaped recovery, or this is now the direction the market wants to go, and this is where it will continue to go. And this will never get back to. Yeah, we won't know that until, you know, next month or so. But if you're position trading, it doesn't matter, does it? Because if it doesn't get back to there, you're just going to adjust your price and adjust your targeting as price continues to push. So euro obviously short, euro Swiss kind of sideways. All the Swissies obviously are sideways. Euro pound at the moment, again, very, very difficult to trade long. As you can see, I've only had 2 trades on this in the last few months, both been longs, both worked out beautifully, but both incredibly expensive to trade long. So I'm short only euro pound at the moment, or I will be short only euro pound. That interest rate differential probably is going to change though if we continue to drop that pound rate, but I'm not convinced we will do. But we're at a beautiful support area at the minute. If this breaks, however, it's kind of a lookout below scenario look. Yeah, so the euro is at one of its weakest points against the pound since COVID. So this was the low, the post-COVID low. That was the pre-COVID low. Look at where we are. Yeah. There is a good chance that when we get down here, by the time we get down here, it will bounce, because this is only, if you look, this, let me draw the low in properly. Look. So these 2 lows here, yeah, if we look at them where we actually are in relation, we're only 150 ADR away from the pretty much all-time low. Yeah, market loves lows. all-time lows, all-time highs. It loves to bounce at them. So this is a perfect opportunity for a long. It's going to cost you if you have to hold it, but there is a good chance that we might get a big bounce out of it. But the interest rates are different here. The economy's different here. We've got a war going on, which could well affect them. We've got a brand new president in the US, which is going to change all the trade routes. So the danger you've got here is if we do get to that level and it doesn't hold, you literally have nothing to stop you. When the market gets to all-time highs and all-time lows, it tends to pop. So you've got to be very careful with this coming down to these areas. I'd be much more interested in shorts than longs, but obviously when it gets to these zones, it doesn't just go parabolic, it bounces out. Yeah, so as long as there's market structure in play, it shouldn't really matter, but be careful with it. It's a very low ADR pair anyway, so it doesn't move an awful lot, but hard to call the euro pound at the moment. Euro New Zealand, very much sideways as well, so either direction on this one. Obviously, again, for me now, longs are too costly. I will short it, but rather not long it, and obviously makes sense from a fundamental perspective. So good entry there. I got out of that one. In fact, it was a good decision to get out of that one because it did just push up, but obviously I would have been in there. I'd have taken a second there, and I've been out. But again, that would have been a 1, 2, 3, 4, 5 day hold with a 1490 swap. Yeah, so again, that would have been an incredibly easy trade, but incredibly expensive trade to take. This is the problem. Yeah, this is what we really got to start paying attention to this now. Euro US dollar. So last trade on this was a long. All the US dollar pairs, basically, your guess is as good as mine. This is going somewhere. No idea where. We've been, for the last year or so, 2 years, hanging off the word of every banker. Yeah, we've been listening to Bailey. We've been listening to Powell. We've been listening to Lagarde. We now need to listen to Trump. Yeah, so he hasn't opened his mouth yet properly about anything. He's sitting there figuring out who his team's going to be, and then he's going to come out and go, right, this is what's happening in January. Until that announcement comes out, this could go parabolic. It could stay where it is. It could just do normal movement up and down. It could do anything. So right now the US dollar is an enigma. You just don't know where it's going to go. It's sitting around, and we're waiting to see whether or not that is the new norm. The strong US dollar. The fact that they're dropping interest rates means that it should be slightly weak, but we've got the Trump phenomenon effect now, haven't we? So right now, I would want to be shorting everything against the US dollar just in case, because even if it does go long, it's going to do that very, very quickly and easily on news. So I'd rather be short than long, basically, on anything US, especially the euro, because it's coming down fairly quick. We'll cover the pounds in a sec. Side note, for those who are doing position trading with small leverage, beware of your risk. You won't be able to do aggressive drawdown control. Yeah, you can't do position trading with small leverage. You have to have 1 to 200, 1 to 500 or so. You can't, I mean, you can, like you've just pointed out, you can use the maximum trades, but you won't get your trades on. Yeah, if you go this trade here, if you had 1 to 30 leverage, you'd be getting margin called up here on one instrument. Yeah, you can't position trade with 1 to 30. It just doesn't work. Anyone know any platform site where you can do fixed odds bets on indices or Forex? Fixed odds bets? Don't even know what that is. That's gambling. Go to a bookmaker, maybe. You're kind of talking about binary options. Forget you heard that word. No. Fixed odds. There is no odds in trading. I don't know what you mean. What do you mean by fixed odds bets? Not quite sure what you're trying to do there, Nils. For instance, where the index will end up on the day. Well, that's binary options. That's binary options. Yeah, it's a con. It's a con. It's a scam. Don't go anywhere near it. Yeah, it's called binary options. Don't do it, Niels. You're obviously new to this. Yeah, you've missed the binary options. We went through a binary options thing where the scammers made a load of money. I don't know if they're still out there, but it's a con. I don't think there are any now. Yeah, the financial conduct. You can see that, right? That's answered your question. Just don't go near it. Yeah, it's a scam. It was a good scam. The new one that we've got now, which has replaced it, is called prop. Yeah, that's the new scam. The old one was new binary options. Then we had Bitcoin and stuff coming along, crypto. And now we've got prop. And then in 2 to 3 years' time, there'll be a new scam that comes along to take all your money away from you and promise you the earth. Yeah, because that's what it did. Don't go near it. The newest version of the POSIA filters for swaps. Unfortunately, on Thursday and Friday, Darwinex shows swaps as 0. Does it? Really? Why would it show swaps as 0? So it doesn't charge you swaps? Hang on. Oh, yes, you're right. Don't trade on Darwinex. Why is that? TP hit on the FTSE. So second position trailing. So TP2 is at ADR basically. I don't know. Never seen a broker that doesn't show swap. I mean, a swap is a swap. Swaps what? I don't know. Yeah. So basically, if you're going to use that filter, check whether your broker decides to change the amount of money they charge you on a Thursday and Friday. Why would they remove it? It's not as if they don't charge it. Swaps charge 3 times on Wednesdays and none on Thursday. Yeah, I know they don't charge them. You don't get charged swaps every night, but the swaps don't vanish, do they? You'll have to check with your brokers on that one. So yeah, if that is the case, then you wouldn't be able to use that. I've never seen a broker that does that. This here basically is pulled from the broker data. So if I was to put the position trade at EA now on a Darwinex account, these would show 0 and 0 because it's the data. All I'm doing is I'm drawing this from the specification. Yeah, everybody charges 3 times swaps on Wednesday. All brokers do that. That's normal. But I've never seen a broker that decides to not show you the swaps on specific days of the week. Mind you, I've never really looked. Robo Forex don't, so I'm staying there. That's something just to check with your broker. Let me have a look at TD365. Where's the terminal gone? Oh, there it is. Yeah, so TD365, they show swaps. Robo Forex do. This is Shift Markets. Let me try them. Yeah, Shift Markets do. I don't know. That's a weird thing. I don't know that I've never seen that before. Yeah, I mean that's something you just have to check on it. If you're trading with Darwin X, it will become apparent, obviously, won't it? Because suddenly everything will become zero, and you'll be like, the EA's broken, and I'll be going, no, your broker's an idiot. This number here is a calculation of what you get charged based on interest rate differentials plus broker commission. If your broker decides to remove that information from your terminal on 2 days of the week, there's nothing you can do about that. You can't say, I'm not going to trade on Thursdays and Fridays because my broker doesn't tell me what I'm going to be charged next Wednesday. That's pretty bad, isn't it? If, like, right now on the pound odd, if I short the pound odd, it's going to cost me 13.10 as a swap. It costs me 13.10 as a swap if I hold this position. If I take this position on a Thursday, I need to know what it's going to cost me next Wednesday. You can't hide this information from me, because although I might be taking the trade on a Thursday, I'm still going to be in it on Friday next week. So I need to know what the costs are. That's really bad. I didn't know that. One to be aware of, people. I'll put a post in Discord about that. Good observation. Don't agree with it at all, because basically what they're doing is they're telling you, hey, it's Thursday, you can trade for free. And then Wednesday comes around and you go, what's all these charges? Oh, it's your swap. What do you mean my swap? Hey, have you looked at the specification? It's all there. No, it wasn't there on Thursday. That's really bad. Darwin X have just gone right downhill in my observations. But then again, I've never looked at it in detail before, so who's the idiot? Never mind. So yeah, be aware of that, everybody. Right, pound. So pound odd, we're very much... Pound obviously has dropped its interest rates, which we were expecting yesterday. So fairly bearish on the pound at the minute. Bailey, however, has come out and said yesterday that there's it's very, very unlikely we're going to have a strong drop in interest rates. That's Powell. More Powell. Where's Bailey? He's back here somewhere. God, Bailey, where are you? Here you are. So this is the interest rates yesterday. So everybody voted for a drop, which was expected. The GDP forecast is looking pretty healthy. There's a very small chance of a December cut at the moment. So when you see this, it's like if there's only a 25% chance that they're going to drop in December, unlikely they're actually going to be doing a continuous drop. So I think with the pound, what we'll probably find is the market will be very neutral on it, in the same way as it probably will on the euro now. And it will get pushed around a lot by the other currencies, because Bailey's not giving any real information. Disinflation is faster than expected. However, we are expecting a bounce of 0.5%. I watched an interview on the news with him last night, and he was incredibly hawkish. So, but I don't know. I think we need to kind of be trading it in either direction at the moment, but with ever such a slight bear stance on it, because it could change very quickly. The problem is, as I say, Trump getting in now, everybody's going to be seeing extra costs on everything they do to do with the US. So at the minute, no RSI extensions on this. We had a short up here, as you can see. I took that one from that extension. Nice big retracement. Right now, that's probably the best option. 4 hour, you probably got an RSI extension on that. Yeah. So you got an extension below the 30 on it. So looking for a pullback up into propulsion, test that double weekly low, maybe all the way back up into there, but structure certainly at the moment bearish on this one. Aussie's obviously not changing interest rates, so they'll remain stable. Pound reducing on the interest rates. Pound CAD sideways at the moment. Trade this in either way. Had one entry back here. There was an option. Oh, I did take that one as well, so I took that one short. Missed that one long. But yeah, that's pretty much it. Up, down, up, down, up, down. Absolutely no reason why that shouldn't continue to do the same thing. Pound Swiss we've looked at. Pound Yen we've looked at. They're all sideways. Pound New Zealand. This one at the moment, a little bit like the Pound Odd, in the fact that there's a high probability it's just going to flip-flop around. So Pound New Zealand, I'd be happy to take shorts. I got out of this one here. I would have had an exit on it, but I did get out of that one. Nice divergence. Actually, it's not. Ignore that. It's not divergence at all. But yeah, so, I mean, happy to trade this in either direction at the moment. The problem, as you can see with this one, is because it's a New Zealand dollar, it's incredibly expensive to trade it in either direction. So there's very few pairs which will be coming off the radar. This is one of them, unfortunately, the Pound New Zealand. This has got probably the most volatile and the highest ADR of all pairs out there. So when you look at the ADR dash, Pound New Zealand is 153. We've got the Pound Yen at 180. That's about it. So yeah, it's the highest volatility pair because you've got a low volume Australasian pair against a high volume European pair. Therefore, it tends to move a lot intraday because you've got a lot of movement happening during the Asian session, and then you get a lot of movement happening during the London session and the New York session, meaning that this one gets double bubble. And because it's got lower volatility, lower volume than the Australian dollar, it tends to slip more and you get more movement. So it's a very high risk pair to trade, and it's a very high volume pair. So swaps, unfortunately, very expensive on it at the moment. So until we get one of those coming down within the area that I want them to be, I probably won't be trading the Pound New Zealand. However, it might be something that I make an exception on because it does usually move very, very, very nicely. So it's a decision that I'll have to make. What I might do is just run an analysis on the last 12 months of Pound New Zealand trades and look at the swap costs. If I find that all my trades on the Pound New Zealand over the last year have been in and out within a week, that doesn't really come into it too much, does it? However, if I've had a few trades in there which have lasted 3 or 4 weeks, it's just going to become difficult to make money out of. So I'll do an analysis on it, but this one should continue just to move up and down as normal. So we'll see what happens with it. But Pound US dollar, obviously this one's an anomaly at the minute. Your guess is as good as mine. Volume's picked up, obviously, with the election. It's undone pretty much 70% of the move. So we have had pretty much a V-shaped recovery, which is kind of what I said could well happen with all of these US moves. But you just never know what's going to happen with it. So it's almost pretty much reset back to where we were before the election. So just business as usual on it. Much rather be doing that than that. Yeah. This one's a bit of a close one. With this this swap filter, yeah, you have to set a number in here. I've put it at 5. Yeah. So basically, if it's costing more than 5, then I don't want to be involved. Looking at something like this with a Pound US dollar, it's sitting at 5.6. This is one of those where you probably look at it and go, oh, all right, for the Pound US dollar, we'll put it up to 6. Because I still want to trade this in both directions, really. And I want the EA to be able to do that. So it's something I'll eyeball every now and again and, just pop onto the VPS and just change it. But yeah, very, very up and down, obviously, the Pound US dollar at the moment. there is a probability that we might get some squeezy moves off the US, but as I say, we're not going to know that until it starts to move. So we're waiting for Trump to open his mouth. And more importantly, what I want to see is what the market's reaction is to Trump. I remember when I was trading before when Trump was in, it was fun because he just moves this thing like that. You can wake up in the morning and go, I fancy powering the US dollar up. I'm going to put trade tariffs on China. He'll just tweet it, right? He won't tell anybody. He'll do it from his bed. Yeah, he won't consult with any of his team or anything. He'll just say it, and the market will go nuts. And then someone from his team will come on and go, "What Mr. Trump meant was," and then it undoes the entire move. Yeah, but he will say stuff and tweet stuff that will be confirmed, and that's where you get these parabolic types moves coming from, and there's nothing you can do about them. You just got to deal with them. So at the minute, I'd rather trade it in both directions because he says stupid things as well as positive things. Yeah, so at the minute, as you can see, it's very range bound, and there's a high probability it's going to stay like that now because I don't think these two will be changing their interest rates very much at all, and interest rates are the same now. Yeah, so 4.75 and 4.75. Sorry, where are we? Yeah, 4.75 and 4.75. So the interest rate differentials are the same. So either way on that at the minute, there's no setups at the moment. In fact, even during all of the volatility on the news, we didn't get any RSI extensions, any big ones. So no signals. Last long was back here. Excuse me. Which you would still be in. In fact, you'd definitely be out on that. You'd have been out on that. So that would have been your exit. New Zealand. That's the block that I've drawn in from the pound, the euro pound, which annoyingly has the same price as that New Zealand. There. Just remove that. So New Zealand dollar CAD, all sideways at the moment, very much sideways, same as the Aussie CAD basically. The Aussies and the New Zealands obviously move very closely together, so you've got correlation with the Aussie CAD and the New Zealand CAD. Both commodity pairs, same as the Aussies, so a lot of sideways movement on these. These are the ones where you get an awful lot of range bound activity, and you don't get too much trending on them. So again, trading either directions on this at the moment. It's slightly more expensive to do shorts on it. Longs are good. So I had a nice easy trade there, but right now sitting in the middle doing virtually nothing. New Zealand dollar Swiss, again, all Swissies are sideways at the moment, all the yens sideways at the moment. New Zealand dollar US dollar, same thing with this one. US, no clue. This is interesting. Look, so we've had that massive strong move on the US dollar, but what we've actually had is a complete reversal here. So that's weakness in the US dollar, isn't it? Begini is looking at the FTSE. Yep, down to 4R. So TP1's been hit. TP2 is ADR for me. On its way. I've got a 2R trailer on it, so I've got another $200 already locked in. So guaranteed $510 a day. Pound. This is a pound account. I might have to swap, from Darwin X. It's put me off. The fact that they hide swaps. I think that's crook. I just really think that's crooked. Hiding the swaps. So they do it on everything. See, they don't do it on gold. They don't hide the swaps on gold. They don't hide the swaps on indices. But on FX, it's not hidden either. Am I going mad? We just looked at this and the swaps weren't there, yeah? Look at the swaps on the US dollar try. 2,742. Okay, I don't know what's going on because they're there now. They weren't there earlier. We looked at it. Everybody saw me. I looked at it and the swaps were 0. Now they're not 0 anymore. Gonna have to keep an eye on that. But they're back. Mine never change. I've been using this for a while now with the swaps. They don't change. They're always there. They don't disappear. Don't know. All 28 normal pairs show 0, do they? Let me put some normals up. No, they don't. Swap long is 2.7. Swap short is 3.6. That's the pound US dollar. New Zealand dollar US dollar. 3.5, 1.1. Three-day swap is on a Thursday, correct? The Wednesday night swap, yeah. But they were not there. I'm going to go and have to watch my own replay to confirm I'm not going mad. They were not there. Now they are. So, right, I've had a data problem. So we've had an issue. You saw this morning, this trade, I took one short and one sell stop. I couldn't cancel the sell stop off. And then all of a sudden the sell stop turned into a sell. I refreshed my servers basically. So I'm wondering if there's a data issue today. Something's going wrong with the Darwinex servers because this trade was all weird, wasn't it? As I don't know. As I say, I have never really looked into the swaps in any detail. They've always been there. They've never been bad. Now I'm looking into it. Obviously, I've looked at multiple brokers and I've did a broker comparison as well. So this was an interesting comparison to do, yeah. A broker swap comparison, yeah, and how different swaps are in different brokers, yeah. They will always usually give you roughly the same. Either the long will be expensive or the short will be expensive or whatever. But the difference is quite dramatic between different brokers, yeah. So, you know, some of these swaps that you see in here, like they're charging $1.50 on something on the pound US dollar. These guys are charging 0.07. Yeah. So they do change a lot, but all brokers charge them. They don't have a choice. They have to borrow money on your trade. They pay interest on it. This is what this is. The swap is the interest rate differential loan that they are paying. They have to pass that fee on. They can't just say, don't worry about it on a Thursday. It now shows swaps on US dollar CAD. We'll write them an email. Yeah, contact them. I get the feeling that they might have had a problem this morning because this trade screwed up. But anyway. So yeah, New Zealand dollar, US dollar. At the moment, looking fairly bullish off of the last month's low. But obviously this is US dollar. We've no idea where this thing's going. So what we could also find is in the next few months, or the next sort of 4 to 6 weeks or so up to Christmas, the US dollar is actually quite quiet because the market won't know really what to do with it until Trump gets into power. So what we might see is stability, which would be fantastic because every move that the market puts in will just get undone, which is lovely. From a mean reversion perspective, you just print money. But obviously bear in mind also that we usually get the Santa rally in December, and the Santa rally means negative US movement because the stock indices rally. So we've had 1 year out of the last sort of 5 or 6 we haven't had a Santa rally, in which case then the US dollar will rally, but most of the time the US dollar drops on its way to Christmas because the stock markets rally. So we'll see. So if that is going to be the case, you want to be longing everything against the US dollar. But if we knew what it was going to be, we'd know what to do, wouldn't we? US dollar CAD sideways. Obviously, we know about the US dollar CAD. This thing's a nightmare. I think some of you are still in this short. If you didn't manage to get out on that pullback, you would have needed aggressive drawdown control positions on to do that. So if you're not taking aggressive drawdown control, or you didn't need to, then obviously you would still be in it. So at the moment, we've got a lower high, or rather a double top that's gone in on the election rally. So basically what happened with the US dollar CAD is we went straight up, we tapped the double top virtually to the pip. Yeah, we did the gap fill. So it gapped down when it thought Kamala Harris was going to win. That's when I got the opportunity to exit. It's painful to look at, but that would have been the equivalent of around about 35k for me. I took 16, but ouch. I'm glad I did though, because obviously it came back up on double top, so we immediately bounced off of that. They resold the highs, and now we've got a reversal and what looks potentially like to me a retest today. So if this drops today, market structure has shifted short, which would indicate a weakness in the US dollar coming. And there's a very high probability they're still going to want to scale out of this. They haven't scaled out of this move. Look, that's all we got. It's not even a 23 retracement. Yeah, it's a tiny, 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 tiny little move. Oh, it is a 23 retracement. Sorry, I lie. So it's a flag break, basically. And the flag break failed. We turned into a double top. So what we're doing is accumulating at the highs. Typically, then the next move will be a profit take. So I still think there's a high probability of a short on this, but it's just impossible to call with what's going on with Monsieur Trump. So we'll see. Seasonal weakness in the US dollar. Yeah, seasonal weakness is good when it's not playing out. I've done analysis over the years on seasonal analysis. And my conclusion was it works sometimes it doesn't. Yeah. So this is the thing in trading. You hear me say it all the time. Everything works until it doesn't, and that is the case with trading. Every single strategy works while it's working. When it doesn't work, it doesn't work. Seasonal analysis, the Santa rally phenomenon, works when we get a Santa rally. When we don't get a Santa rally, it doesn't work. You cannot predict the future based on seasonal movement in the same way as you cannot predict the movement based on RSI extensions. You cannot predict the movement based on what it did last time at a monthly high. Yeah. It worked, it didn't work. Same with seasonal. Yeah. Is this December going to be a rally or a dump in the US? I can tell you the odds. It's 50-50. Yeah. If you start paying attention to, I'm only going to do this in this month, you will get it wrong every single time if it doesn't do what you're expecting it to do in that month. Yeah. The market just doesn't work that way. There are periods in the year where things are more likely to happen. But when you see them not happening, you've got to be able to flick the switch and go, right, doesn't look like it's going to be this year. And if you can't flick that switch, you will just hemorrhage constantly. This is what people do when they system hop, isn't it? Yeah, we find a system, we backtest it for 3 months, and it's got a 75% strike rate. And what we do is we continue to do that because we've seen it happen 75% of the time. Unfortunately for this month, it only works 40% of the time. We end up making a loss. So we then go, well, that didn't work. I'll find something else. That probably would work again the next month, but you don't give it the opportunity to, because this month didn't do the same as last month. And this month isn't going to do the same as this month or this month, because every month is unique. However, you do get seasonal movement sometimes. In the same way as we looked at the S&P I think I did this in the member stream yesterday, didn't I? We looked at the S&P. Yes, I did. Or was it on the other day? Here we go. I've still got the analysis up. Look. We looked at the S&P 500. And we've marked out all the Santa rallies, all the Decembers. So I got really itchy nose today for some reason. I keep getting that. We marked out all the Santa rallies in December. Yeah, so that one worked. That one worked. That one didn't. That one worked. Yeah, so in the last 4 years, we've got 75% strike rate. If this December is a down month on the S&P, we've got a 50% strike rate. This is a binary market. There's a high probability it's going to go bull or bear. That's all it does. So, you know, I'm not a fan of using seasonality as an edge, because I don't think there is an edge in seasonality. There is a higher probability of something happening sometimes. But what you tend to do when you have that approach, that's not happening. Look at that. Talk about put the handbrake on at my TP. Look at it. It missed my TP by that much. I'm having that. Yeah. This is why you need to watch. Yeah. You watch the market. If that thing had come up to there, that's the equivalent of me losing £290. Making that decision there and letting it carry on is £290 difference. I'll have that, thank you. But yeah, just seasonality. I can't see a sustainable edge. If you've got something that you can look at a seasonal move, or something that happens every month, or even every month, 1 week of the month, if you could identify that the 4th week of every month for the last 25 years has been a bull week 60% of the time, that is an edge, because it would normally be somewhere around about 51 to 49%. So if you can go back over every December for the last 25 years and show me data that says that 70% of Decembers are bullish, my edge on that would be I'll buy it on December the 1st and I'll sell it on December the 31st. That's the way I would use that. You can't go, I'm only going to long it in December, because it's just not going to work that way. For a start, if it's going to go up, it's going to go up like that. So you can't just have a long bias on it, because you're going to miss all the short profit. Today, this thing coming down, you wouldn't have taken that if you were long only. Yeah. Which is why, again, people have asked me to put a moving average filter into the stock index hedge and the opening range breakout EA. And I'm always saying, what's the point? If you only want to trade in one direction, the edge of this is we go with momentum. If momentum goes down and you only want to go long because there's a moving average pointing up, you're not going to trade it, are you? You're going to miss all the profit. For example, turnaround Tuesdays for indices. Exactly, yeah. So for those Euro Yen 125 ADR, US dollar Swiss has just hit its weeklies as well. Oh, it's already hit the weekly range. Sorry, that was the weekly range out there. Yeah, so the turnaround Tuesday strategy we looked at, which is the Monday close strategy. We built this EA in the blimey, that's big. We built this EA in the members group. Basically all it does is it looks at what the previous day was on a Friday. On a Monday, it goes, I can't remember what's the strategy. If we're down on a Monday and Friday was up, wasn't it, or something, we buy it. I don't know, but it's an edge, basically. But it is an edge that works on the fact that if this day is that and that day is that, then the idea is that more times than not, this will happen. Yeah. And it's one of those strategies that has an edge. But the execution of the edge is based on or the profitability that you can get out of the edge is based on how you apply risk to that edge. So for example, the original strategy only did one thing. I've adapted the strategy and turned it into position trading strategy, and now it's much more profitable. It works very, very nicely, but it's still hit and miss. The only reason I've made this profitable is because I've adapted the strategy into a position trading strategy that makes money. But the edge is there. Yeah, there is an edge to Mondays being a certain day based on the previous movement. But it's not a great edge, as you can see. It's the same thing as, investment. Pension funds, hedge funds, not so much hedge funds, but pension funds and investment houses. They do very similar things with... they have playbooks. So, for example, this type of strategy, they will let it play out, but they won't expect to return more than 5-10% or whatever it may be over a period of 4 or 5 years. Same with the S&P 500. If you bought the S&P 500 in January every year for the last 15-20 years, and you sold it on December the 31st every year, you would make money. You would make 8% on average per year. So just literally buying the S&P in January and selling it in December has an edge of 8%. Warren Buffett has made billions, and that's all he does. Yeah. But if you identify an edge over a long term, you will always be able to make money out of it. The problem is people can't sit through this because it goes, oh, no, it doesn't work. Oh, it works really well. No, it doesn't work. Oh, it works really well. It doesn't work. The end P&L on this will be positive, but it won't be enough for you because you could probably get the same return if you just stuck all your money in a high interest savings account. Or if you just bought the S&P 500 in January, you get the same return. What people are looking for is, I want this every month. And that's where edges fail. Because to find an edge that produces 10-15% profit every month, month in, month out, virtually impossible to do. Unless you just let the market move up and down, which is what position trading does. But it's the same thing, isn't it? This is kind of like the Santa rally. It has got an edge. It's not looking good at the moment, but it will. I'm running this on pound yen for a start. What we should be doing this is running this on indices, which I haven't got on this terminal at the moment. So anyway. Right. Playing the long game, exactly. But only play the short game as well. I know what you mean. So that's all I've got for you today. Not a lot else to discuss, really. We're waiting for the market to figure out what it's going to do. So today, I'm hoping today, and I'm a bit playing it by ear at the moment, but I'm hoping today we don't get a high ADR day. We just get some intraday movement. And if we can get intraday movement, then or intra ADR movement, I should say, then Monday I'll get the EAs back on again and start getting into some new positions. But I think for the next 4 to 6 weeks, it's going to be very hit and miss, basically, with everything that happens with the US. So we've also got the fact now, obviously, that Putin's woken up. Now wants to talk to Trump, obviously, because he didn't like Biden. And Trump has got history with Putin. He's got history with Kim Jong-un, and they're both basically fighting Ukraine now. So there's a possibility of Trump doing a U-turn on weapons supply to Ukraine. That's going to upset Europe. There's so much that could happen now he's got in. It's, when they use the terminology, a spanner in the engine, he's the biggest spanner out there, isn't he? Yeah. So not from a idiot perspective, but from he has the power and he just does what he wants. So financial markets are driven on economics. He drives economics for the next 4 years. So we'll see what happens. And especially now he's going to put the richest man on the planet into government as well. Elon Musk is getting a job with Trump. Couldn't make it up, could you? 2 of the most powerful people on the planet running the most powerful country on the planet. What the hell is going to happen next? Anyway, so I'll be back on Monday. So next week, live rooms going to run the same schedule next week as I've been doing this week. Nobody's moaned about it, so I'm assuming everybody's happy with it. So Mondays will be analysis of the week coming up. Tuesdays and Thursdays, member streams. Wednesdays is a PM session for the US, and Friday today, which is basically waffle and whatever you want to do. So we'll be working on those strategies that we're working on in the members session, and I'm going to start live forward testing those, I think, next week, just to make sure that they execute properly. And make sure that they play out live the same as they have done in the strategy tester, because the equity curves are looking pretty healthy, aren't they? So I'll be doing that next week as well. I think I'll set some demo accounts up just to get those trading. In fact, what I might do, I might set up some small live accounts actually, because one of them we really need to see how it trades in live conditions, because demo account, obviously they give you nice spreads and low swaps and all the crap. So I want to see how it trades on a real money account. But yeah, look at that. Totally falling out of bed. Watch this low for a bounce today. 125 ADR on the FTSE. Limit orders likely to trigger at the monthly low. So that's your bounce point today there. DAX could well turn at any point. All right, so anybody got anything else? I'll be in Discord for the rest of the day and obviously over the weekend, etc. But back on Monday at 8 o'clock. We'll have a look at what's coming up news-wise next week. Yeah, and put a plan in place for moving forward. All right, have a good one. Anything you need, let me know. Otherwise, I will see you next week. Have a good weekend.